The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Yeah, looking good, Billy Ray. Feeling good, Lewis. Good morning, everyone. From the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania. We start out with our usual show, looking at the DAX index. As you can see, we've been rolling over a little bit, but the big one is what's been happening with the FTSE. You remember the FTSE has been the leader of the European campaign over these past few weeks, and you can see the big drop that we've had today in the FTSE. Now, it's probably related to politics, just like everything else. So keep in mind that these things can change, on a heartbeat. But the FTSE had been the leader, and it's certainly leading it to the downside today, if that's going to be the case. Now, I've had a couple of questions today about stocks that are in the news, and of course, one of them happens to be Apple. And we'll get up here and take a quick look at this. Get this out of the way here so we can see it just a tad better. Hold on just a minute. And there we go. Get this up. Okay, here's Apple. Now, the question that someone asked me, how do you profit, into an earnings report? Two things about Apple that are interesting. I believe it has the highest percentage of being higher after an earnings report of any stock ever. I think it's like 75 or 80% of the time the stock jumps after the earnings come out. I believe those were the last statistics that I saw. You'll notice on the far right side over there where it's trading at 198.20 just a little while ago. We had as high as 199. That's that 1.27 expansion up there, but we did have the 3 drive to a top pattern, came in at the 195 level. From that level, we sold off 8% over a 2-week period. It stopped right at the 382 retracement of the low from April, and it has continued to make a new high. So the 1.618 expansion on this comes in at 202.50, which is not very far away from 199. We could hit that right after the opening for sure. It's on its way to be either the first, I think it's be between Amazon and Apple, who is the first $1 trillion stock. Folks, that is a figure that is absolutely beyond belief. Back in 1930, right after the stock market, no, it was right before the stock market crash, Andrew Carnegie sold U.S. Steel to Charles Schwab for $454 million. Now, $454 million back in those days was a lot of money. I'd have to figure out what that would be on today's dollars, but that was still a great deal. And of course, Schwab really suffered for quite a few years before the things finally turned around, when World War II came around. There's another stock that's in the main thing I want to talk to you about here is if you're going to do something like this, know what the probabilities are for the market to be higher or lower after the openings, after the earnings come out, because that's a statistic that you can use. And you almost have to use, well, if you're really heavily leveraged and, you can take the heat, you could certainly do the stocks, but it's probably much better to do the options because, you're limited, on your options and how much you could, win or lose, especially if you're doing puts and calls. If you're selling calls and puts, that's a totally different story. Now, the next one is even more interesting because here's a stock. This is Tesla. We'll get this up here. Take a look at it. Now, Tesla brings out their earnings today. Now, there's a little difference in Tesla because if you look at the cycles that we've had since December, we bottomed here about 2 weeks ago. We had a pretty strong 5-day rally, and then the market broke down. Now, we're setting right at the 61% retracement here in Tesla. That comes in around 293. The stock's trading at around 297 this morning. But if you had to put a gun to my head, the probabilities of the earnings with Tesla are, far different than they are with the, than with Apple. But, they can certainly you can see some of these big moves like what we had way back in June of last year. You had one of those big drops, and we had another one in April of this year when they happened. But the odds here favor that you'd be buying a put as opposed to be buying a call if you were doing Apple. Now, that's just the probability. Hey, boys and girls, I don't do either one of those. I'm just saying that if you do that kind of thing, know what those probabilities are before you do it, because that's what your edge is along with the pattern. So that's what I would be watching today in Tesla, and we'll see how high Apple can get, whether it'll make that 1.618 or not. The overall picture in the NASDAQ is still relatively bearish. We've had a pretty good rally, mainly because of Apple and a couple of the others, of course, but if even Facebook had a little bit of a rally. So we'll see if that's going to be the case. Now, I wanted to, oh, by the way, we have a very special guest today. We have Bill Meridian from Cycles Research out of Vienna, Austria as our guest today. Always interesting. He's got a full program for us. So that'll be a lot of fun, to take a look. And one other thing on a programming note, I will not be on the air on Friday. So I'll be back on Monday, but Friday I will not be here. So you get a break for that. And let's move on to something that I want to talk about, and that is the gold market. One of our very, very dear friends from across the pond, and one of really, really super trader and a great technical analysis, has brought to my attention some really interesting cycles that are coming in here on the gold market. Now, these are Fibonacci cycles, folks, and I really like these because these are different than the static cycles that we saw with Tesla. With Tesla, those were just nominal cycles. Jim Hurst called those nominal because they were always the same. In other words, if you have an 18-day cycle, you multiply that times 2, you get a 36-day cycle. You multiply that times 2, you get a 72-day cycle. The problem is, folks, as we all know, these cycles shift back and forth. And that's one of the reasons why I really like the astral cycles as far as cycle phenomenon like what we've had here in the full moon and the lunar eclipse that we had last Friday, and then also the one we had in the 29th of January when the market had a big drop, where we dropped over 20% starting the year out, making a low on February the 7th and then rallying. But back to this gold chart. This is a weekly chart going back several years. You can see the big bottom that we made down there at the 1130 level. Remember that the bottom for 2015 was at 1030, so we're still quite a bit higher, but we are seeing some expanding cycles. Now look at this, folks. If you look at this really closely from high to low, you're looking at an 8-week cycle, a 13-week cycle, a 21-week cycle, a 34-week cycle, and a 55-week cycle. We have 5 different cycles that are pointing here, coming in, into our time frame that we're looking at right now. And as you recall, July and August and September are the strongest months, for gold. So this is something that might be something to keep a really close eye on, because a lot of things are pointing to the fact, and we've held this support now pretty nicely in some of these things. If we look at silver, you'll notice that silver has held up above the support extremely well. And we'll be right back right after these few words.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to take a look at the platinum market here. As you can see, it's acting extremely well compared to the gold and the silver. It's much stronger. Whether that is an indication that it could be the turning point, we're not sure yet, but the fact that platinum is holding up. The interesting part is you'll notice that the bottom was right at a beautiful 3 drive to a bottom pattern that is, one of the patterns that we like to see at tops and bottoms because it gives you a really great place to quantify, what your risk is going to be. Now, one of the markets that we've been following very, very closely in the newsletter, in fact, there's 2 of them that I wanted to talk about this morning. The first one, of course, is the crude oil market, and I wanted to bring the chart up to show you that we had such a negative bias coming in on crude oil this week that we were looking for a price to come down to about around the 65.40 level, which is the 78% level. Of course, it topped at a really nice 3 drive pattern up around that $73 per barrel level. Now we're quite a bit under that, folks. We're better than 10% lower in the crude oil right now, and our overall pattern that we're looking at should take us down somewhere near $65. Now, if we look at crude oil really closely, you're going to see that it is breaking down, quite a bit this morning. In fact, when I posted this just a little while ago, we've now broken below, this is the 61% retracement, and we've now broken below the 61% retracement in the crude oil. We're down trading around the 67.40 level. So that tells us it's going to go even lower. Now we're only $2 away from that price objective we were looking at, which is around 65.40. So it's getting very, very close. We dropped $2 a barrel yesterday, so $2 a barrel today. You're right at that objective, and that's going to be interesting to see whether we're going to hold that. Now, there's one other market that has been under a great deal of pressure that we've been quite bearish on, and that is the Treasury bond market. And I wanted to bring that up to show you that we really are getting ready to have another leg down. It appears these markets just they have what they call the proverbial dead cat bounce. If you look at the Treasury bonds on the daily chart here, the key thing to take away on this chart is the fact, if you'll notice from the high that we made way back in August, and that was just a recovery high. The high on the bonds was a year and a half ago at 177. That was a 382 retracement, and that market rallied for 3 months, to make that retracement level. And look what happened. we had a 382 rally, just absolutely right on the 382 number at that 147. And now you can see we're breaking down. We're ready to take out the June lows. I believe we've already done that this morning. And that sets up a price objective on a 3 drive pattern, as you can see, taking us down to 138. That's 4 handles from where we are, right now. Now, whether it's going to go straight down from here or not, but, yesterday, this market had a very, very strong rally, well over 1.5 points, and it gave it up just like that. I mean, when the market does that, it's telegraphing that it wants lower prices, and this means the bonds are going to be going lower, i.e. higher interest rates. Whether this has anything to do with the economy or the stock market, I really don't know if that means anything or not. Look at each one of those separately, because we've seen markets go up in rising rates, and we've seen them go down in rising rates. So look at them each separately, and you'll see where you are to see what's going on. There's a divergence between TFNN hosts and guests on bonds. Yes, Terry, you're absolutely correct. That's because some people like chocolate cake and some people like white cake. I am not a fundamentalist, folks. I look at the charts. That's all I look at. I have a master's degree in economics and business from Indiana, and I swear to God, I know less about it than when I went to school, because all I do now is I just look at the charts. I learned that so many years ago. I think the last time I really looked at something on a fundamental basis was I think it was 1976, and I believe that was I think it was 1976, and even then I didn't know anything about it. It was something from Harry Schultz about the gold market, and he was bullish on gold, and I could see it breaking out, and then I started working at Drexel, and that's it. Oh, by the way, I was sharing, the supposedly, best times at Drexel, and boy, I ran it by my daughters yesterday, and I talked about that, going to the Gold Cup with Paul Horning and Robert Wagner and John Forsyth, and both of my daughters said, "Dad, not even close, not even close. Too many others." And I says, "What are you talking about?" She said, "Dad, the private rooms at Disneyland." She said, "And remember," she says, "we met Roy Rogers and Dale Evans." And I said, "Yeah, you're right." And so there were a lot of others, but I had forgotten them. I'll share them with you some other time, I guess. But that was a fun years at Drexel. That was a really great place to work, a great boutique firm, and it was really see what we got here. All right, let's. Tom says the rates are down, and Larry says the rates are up. Well, that's like I said. Some people like chocolate cake, some people like white cake, and I disagree with him on that. This is just a chart that looks extremely bearish. That's it. No, Roy Rogers. It was actually Roy Rogers. His name was Leonard Sly, and I'll tell you the story behind it. The ex-wife was a big fan of Dale Evans and Roy Rogers. And in 1977, Milken was bringing out junk bonds for Pioneer Savings, and the spokesman for Pioneer Savings was Roy Rogers. And he was from Cincinnati, Ohio. That's exactly right. And his real name was Leonard Sly. Well, what I did was I arranged through one of the secretaries that worked for Mike to get a introduction to see Roy Rogers and Dale Evans. And so I took the family in, and there was a big sign, of course, that they were there. So I had to go in the back door to the savings place, and we went in. It was a total shock to see Roy Rogers and Dale Evans there in their cowboy and cowgirl outfits, and it went over really great. And of course, they knew everything about them. It was a big thing, and it was really exciting. So what happened was they talked for about 40 minutes, and it was very religious. They're both very religious. And they invited us to go to Dale Evans's birthday party, which was in 2 weeks out in Apple Valley, which was 2 hours from Westlake. And so we drove out there on a Saturday for the birthday party. And they said there were going to be about 100 guests. There were a lot more than 100 guests. But, oh, my gosh, the movie stars that were there that were good friends of Roy Rogers and Dale Evans was amazing. I mean, you don't remember these names, but Dennis Hopper was there. George Kennedy, the good friend of the old cowboy with John Wayne. Oh my gosh, there was just Mickey Rooney was there. I mean, there was just so many people there, and they were just really great. If you want to see how popular Roy Rogers was, go look at Googled what his stuff went for in his estate. Some of his cowboy boots, folks, some of his cowboy boots went for $30,000 and $40,000. The shirts that he wore, the cowboy shirts, they went for $6,000 and $7,000. His pistols, the matching 45 Colt pistols, went for $250,000. You know, it was just really, really something. Yeah, that's right. He played. He was in the Iger sanction. Oh, he played in. He was in. You know, George Kennedy was in many movies because he was the Duke's best friend. They hung out all the time. All right, let's get back. 877-927. Stay tuned for our good friend Bill Meridian.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. And we have our friend Bill Meridian from Cycles Research, Vienna, Austria, on the line. Bill, are you there?
Hello.
I hope we have Bill on the line. I think he's going to be here. Let's hopefully that, well, he said he was going to be here, and TFNN said he was going to be here, but he doesn't seem to be here. Well, we'll have to wait and see.
Hello.
Testing 1 2 3. Testing 1 2 3. I don't know what's wrong. Bill, are you there? Huh? Shut the front door. I don't know.
I cannot hear anyone.
I don't know what the problem is. I don't know. Maybe let me try this. Boy, I don't know if I can even, I can't hear anything either. Wow, this is not good. Wow. All right. Oh, you know what? I think I got a problem. Testing. Hello, Bill, are you there? Well, Bill, go ahead and talk, my friend. I can't hear you, but it appears that everybody else is able to, so I don't know what the problem is. Bill, are you there by any chance? Well, let's, wow, this is tough. I've never had this happen before. Bill, why don't you just go ahead and start the show? I've got the slides up, and I'll put them up as they ask me to prompt. So if you want to go ahead and start, let's just see how it works. I don't know why it's not working. You know what we ought to do, folks, because it's such a total problem here. Let me go through this, and I will get. Bill heard the introduction movie and music and everything, but he's just not. I think there's a connection problem, so we'll just have to. We'll try to see if we can get this fixed. Sorry, folks. I don't mean to have a technical problems, but believe me, I'm the last one that can fix this kind of stuff. Let's move on to some of the other things that I did want to chat about today. Let Bill know here that that I will try to get him back here at another time. I wanted to talk just a little bit about the soybean market that we've got going on, because there's been a big shift here, from the bottom. We're well up. We rallied almost, in fact, we rallied almost $1 a bushel off the thing here. So let's keep an eye on this. The Apple, basically, we talked about Apple. The 1.27 expansion is 199 in Apple. The high's been 199.10. The 1.618 expansion is 202.
Can you?
I would be easily selling up in there with about a $3 stop in both of those, at either one of those levels, because I think this is just the emotionalism that you get, like we've seen with Facebook and Twitter and all the others. But we're looking at something that is connected. We'll see if Bill is on here. Bill, are you there? Well, Larry's not hearing him at all, so I don't know what the problem is. I wish I knew. I'm not doing anything differently. But I really don't know. Can someone let Bill know that I am just I'm in the dark here, and I don't know what the problem is. Man, I can't hear anything. Hold on one second. Oh dear. Anyway, this is this is the first time we've had this problem too. All right. We'll try. We'll try tomorrow if we can. Hold on a second. I don't want to keep him waiting. Hold on one second here. Okay, let's just shut the front door and raise the rent here and see if we get this thing running. No, I don't think it's the new studio. The new studio is supposed to be running pretty good, and I understand it's really, really a beautiful place. It's hard to believe that they left the old 618 address there in Clearwater, because I always liked that address. 618 was a room number. And I believe it was on 618th Street, too, on Cleveland, as I recall. Anyway, it was a lot of Fibonacci stuff at that point. All right, let's move on to a couple other things that look really interesting here, folks. The one is the E-mini S&P. I just wanted to show you the type of rally that we're getting here. And a lot of this is certainly related to the fact that, we have these NASDAQ stocks that when they come out, like Apple, and, of course, we got Tesla today. And, the Tesla has a negative bias, but whereas Apple had a positive bias. So we'll see if that works out tomorrow. But you'll notice that we made a 61% retracement here off of the high that we made into the eclipse back on the 27th. So that should be very important. Anytime we can get above 28.28 in the E-mini S&P, that would be a very, very positive sign if we could do that. Whether we're going to see that, and yes, you could easily see that without any trouble at all. You could see it moving up into that area. You were born on June 18th, Mr. Z? Oh, how cool is that? Mr. Z was born on 618. That's totally awesome. Okay, let's talk a little bit about that ABCD in the E-mini S&P. I don't even know where it's trading right now, but if we get above that 28.28, that would be a pretty good sign. Now, we've been up as high as 22 so far this morning. If we can clear the 28 level, that would make that ABCD up there at 41 that Maria is so kind enough to share with us. Now, the NASDAQ, which is much stronger, we've already rallied 30 points this morning from the early morning low in the NASDAQ, and we should have some resistance up around the 72.87 level is what we could be watching. But there's one market that really is in big trouble, folks. I just want to bring this up to you and show you this is let's just do it on the shorter term time frame. This is the bond market because we've already talked about it on a longer term, but you can see on the shorter term how we're breaking down here. And if we look at this on the on that daily chart that we were looking at, you'll remember that this thing has a lot of numbers coming down here around the 38 level. So we're less than 4 handles away on that. So kind of keep an eye on that. This thing looks like it's going to go lower. It's had a bearish bias for quite some time. And now that we're breaking down below these key levels, that's a very interesting point. Now, remember, we have the Federal Reserve today. Around 11 o'clock, I believe, is when they're coming out. I don't think it's going to make a whole lot of difference. Everybody's expecting them to raise the rates 1/8 or 1/10 or 1/25 of an ounce or whatever it's going to be. I don't believe it means any. I don't think it makes a whole lot of difference on any of that. But that's just my 2 cents worth because I'm not sure whether it's going to be. If that's going to mean much with the interest rates because rates are going higher long term. That long-term chart is just incredibly bearish. If we see the long-term chart in the notes, it's even worse. You know, the shorter-term rates, the ones that's for mortgages and cars and credit cards and stuff, is even worse. You can see here where we are here with the notes. We're breaking down below that same level before, and that's another one that tells us that we want to go lower. Now, the one thing that we've always talked about this debt cycle, but if we take a look here. At the high-grade bonds, just looking at high-grade bonds here, you'll notice that they've been in a downtrend since October. We've had lower highs all the way through here. We're still seeing lower highs, and with an objective down here about another 5% down around that 82.65 level. One of the things that I've been following is the fact that the quality of some of this money that's out there. Like Italian yields and German yields and stuff like that. Japanese yields, Japanese, bonds are yielding 0.1% as opposed to ours at 3.2. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we're going to get this problem fixed by tomorrow, and we will have Bill on tomorrow. Bill Meridian of Cycles Research will be on tomorrow. So let's put that on the calendar because he's certainly got some great stuff to talk about. Now, let's take a quick look here at this cattle market. We had a request to take a look at it. But we've talked about a market that has some beautiful patterns. This December cattle, you can see the ABCD structure in these is just absolutely beautiful. We're sitting right at a 61% retracement now to 112 level here in the cattle. We've had higher bottoms. We've had some higher tops. We are looking that it wants to go higher. So it's going to be interesting to see if this last swing is going to be equal to the others because they've been absolutely, spot on perfect. Someone's asked a question about the grain markets. We've had that big move in soybeans that we talked about early this morning. Same thing is happening in corn and also in wheat. Whether this is related to these tariffs or not, folks, I don't believe that it is because even when these things were dropping, we always said these folks in China and other places that buy our grains are not going to stop eating. That much we know for sure. They have to buy it from somewhere, and Brazil is pretty much sold out. So the only place they can really come for the grains, for corn and soybeans is going to be here in the United States. The corn crop, if you've seen anything with any of the news across the Midwest, you can see the corn is higher than an elephant eye. I mean, it is really a huge crop out there for corn. Question is where they're going to store it if the time comes. The only thing that would hurt the crop now would be really wet weather or an early freeze, and then you'd have some problems to see what's going on. Yes, Brazil is making a big push in selling to China, which they should because that's the market, and they can raise their prices because it makes it more competitive. But remember, we had a $2 a bushel break in beans. That makes our beans very, very inexpensively. And believe me, folks, these countries know how to play the game. They'll come in here and buy our beans at a price and store them because they know they're worth more, 2 months down the road when people want to try to buy them. So watch the prices. Don't concern yourself about the fundamentals and the stuff that you hear in the news. Just the news is going to follow what the prices are doing anyway. That's why a technician is, what I think the way to do it, because if your prices are going higher, you've got more buyers. If prices are going lower, you got more sellers. Look what's happened. They bring these tariffs in, and the beans rally $1 a bushel. That's $5,000. We rallied over $4,000 in corn. And that, $3,000 in corn. So that's that's a big move in some of these things. So keep an eye on what the prices are doing because that's what will lead you, to the promised land. That's what I think. Now I've had a question about the Bitcoin. Let's get this up here, and we'll see what's going on here. Had a meeting yesterday with some folks from a faraway land that is getting ready to come out with a big promotion on the cryptocurrencies on a worldwide basis. They really think this is the cat's meow for the future, but whether that's the case or not, we don't know. But if you look at Bitcoin, since we topped way back in January where we had that 3 drive to a top pattern, that's that with the one that's marked BD and A, that's the 3 drive pattern there. Then we had the Gartley, beautiful Gartley pattern that happened in February. That was up at the C point, and then we've had to move down. We've had, two 38% retracements, and the last 2 have been 61% retracements. Folks, if we can get the Bitcoin down to about $3,800 to $4,000 a share, that's going to complete a monster ABCD pattern. Now remember, this market has been going down since January, so we're 7 months into a down move here starting on August the 1st. This is the 8th month, and this does not look like a bubble at all. Remember, we're figuring that the price of Bitcoin was roughly around $500 when the big bullishness started, but you know, somebody bought Bitcoin at 9 cents. That was the lowest I believe that it ever seen. So I don't even look at 9 cents as the bottom. I'm looking at around $500 because it stayed there for well over a year, I believe, before it started its move up, and it went from 500 to 20,000, and now we're trading just under 8,000. So that's not like what happened in the tulip bulb mania. In the tulip bulb mania, those tulip bulbs, you know, went to look a lot lower. So that's true. You're right, Bill. Bitcoin could be just like Deutsche Bank. It certainly could. We don't know. I have to listen to some people that I respect a great deal, of which John Jameson happens to be one, and he explained to me why this is so important, this blockchain technology. Not the Bitcoin stuff, not the cryptocurrencies, but the blockchain technology is the thing that is really going to make a big difference with some of these things. But it could certainly be just like Deutsche Bank. It might be just a pie in the sky. And, you know, who knows, you know, remember back when the internet started, you know, way back in 96 or whenever it was, 96, 97, a lot of people didn't see much going on in there. And look at that. Look what's happening now, for heaven's sakes. You got 2 stocks that are close to $1 trillion, Apple and Amazon. Whoever would have thought that? So we'll see. All right, we'll take a quick look here what we've got going on. So far, we've been as high as 22.5, 28, 22.5 in the E-mini S&P. The NASDAQ did go up and make the 78% level at the 92 and 90 level. We're trading at, 72.90 level. We're now trading at 72.83, still very early in the morning. We've got crude oil still breaking down, trading at 67.70, and the gold is holding, and the December gold is holding around the 12.27 level, and the euro is trying to hold a 116.70. We're trading at 116.81 right now, so there's relatively quiet this morning. What's going on? But we do have the Federal Reserve out there today, folks, so there'll be some news afterwards, and they'll be talking about the usual things that they do, and we'll see what's going on. We'll see if that works or not. Look, and we'll work one thing at a time as we go through. Now, I had one other chart that wow, my goodness, the break is almost here already. Let's get this up here so that we can take a quick look at it. I just want to make sure I don't miss anything. Let's bring the Apple one back, because this is an important one, I believe, because with all the news out, if we don't get any higher than 199 in Apple, folks, that's going to be a negative, because that's a 1.27 expansion spot on with, you know, really bullish news. So the amount that you have to risk at that point is very, very small. You don't even have to use a put or a call, because, you know, it's at a price where you can put a stop in for $3. You know, that's less than well, that's what, $3 on a $200 stock. That's what 1.25%. I mean, that's pretty much nothing. So you don't have to risk much if you wanted to fade the other side of that. And also tomorrow we'll talk a little bit about what happens with Tesla. Now, we have what we think is a bearish bias in Tesla. I'm not saying to do anything in it. I just wanted to show you the probabilities behind it. Remember what Woody Allen said, folks. 90% of life is just showing up. So make sure you show up for the show tomorrow, because we're going to have Bill Meridian on, and we certainly don't want to miss his show. I think that'll be something that we'll all like to see. We'll see whether these, a lot of cooking in the books everywhere. The other thing that's amazing to me is how can they pick a jury in a high-profile case in 6 hours? Are you kidding me, folks? regarding that Manafort trial. 6 hours to pick a jury. Shut the front door and raise the rent. 877-927-6648. We'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted a chart, a short-term chart, 15 minutes of the NASDAQ to show you what's happening. But what I'd like to do is to expand that out to a 1-hour chart and bring it up to show you where we are. We think that we're looking at a 382 retracement here up around this 7,300 level. So watch that very, very closely. The high that we made back right after the eclipse was around 73.08. So I would guess somewhere around 73.10 to 73.20 should be pretty strong resistance in this NASDAQ, if in fact that is the case, because we've broken down below the low that we had way back on July the 11th, which was an important time frame, and we are heading down. It looks to us that we're looking to go to at least 69.20, so that's another 5% lower than where we are at the present time. So keep a very, very close eye on that as near as we can tell. The bonds and notes are very, very oversold. They could rally from here, but longer term, they do look like they want to go a lot lower. We have the Federal Reserve in today, 2 o'clock, I believe. on the time frame today for New York time. So, oh, wait a minute. I think it's 11. I'm not even sure what time it is. You have to double check that yourself, because there'll be a news announcement afterwards, but we'll see, see what's going to happen with that. So keep an eye. And tomorrow we will have Bill Meridian on. We've got the problem fixed, I believe, and we'll have him on for a full half hour, because he's got some really great statistical charts to take a look at. Remember, we're looking to see if the statistics hold up, that we're looking at a bearish earnings report from Tesla today. That's what the statistics say. We're going to check that out tomorrow to see if, in fact, the technical stuff was correct this time. It's only probabilities, folks. It's never a certainty. That's the key thing to keep in mind. So live every day in an attitude of gratitude, and may God bless, and we'll see you on the flip-flop from 100 South Broad Street, Philadelphia, Pennsylvania.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
No matter